Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we have Randy Smith, founder of Impact Equity, LLC, and also the host of the Gentle Art of Crushing It podcast. Welcome to the show, Randy.
Thank you so much for having me, George. Happy to be here.
All right. Well, I'm really excited to have you on. I know there are a lot of things we want to discuss, but first I want to give you a chance to go a little deeper on your background. So tell us the story of Randy Smith.
The story of Randy Smith, authored by Randy Smith. Yeah, so I am, let's see here, a 25-year veteran of corporate America. I had spent two different 10-year stints with Fortune 200 companies, primarily in sales and sales leadership over the years. Found my way to real estate investing just a handful of years ago through the turnkey rental strategy in Kansas City. I'm actually based here in Phoenix. Shifted over to the BRRRR strategy in Atlanta, Georgia. And most recently, over the last couple of years, I've been investing passively in apartments and self-storage and mobile home parks and even ATM funds. And most recently launched a real estate investment firm where I help to educate and inspire the new or newer passive investor. So that is Randy in a nutshell, the Reader's Digest version anyways.
Awesome. Yeah, so I do want to talk about that fund of funds. I think it's a great model, particularly, I mean, if you're out there looking for investments, you don't have to go for them directly. I mean, you can go to somebody like you. In most cases, now I understand you're working very closely with one syndicator there, but in most cases you get a larger menu of investments to choose from, and you also get a better deal, right? I mean, if I just go in and I walk up and I take my $50,000 to the counter and I say, here, I want to be part of this investment, I get one deal, but with Impact Equity, you're able to negotiate because you're not bringing $50,000 to these deals. Like how much you bringing?
Yeah, at a minimum, well, I'm in the 800,000 to $1 million plus range on the deals that I'm bringing. So as you mentioned, my fund will quite often get much better returns than what the traditional retail investor would get by going to that operator directly. Yeah.
And I mean, just to put yourself in the syndicator's shoes for a minute, I mean, do I want to deal with 16 investors bringing me $50,000 each, or I can deal with Randy Smith and he brings $800,000 to $1 million into the deal, and then I just communicate with Randy, and Randy's going to send those emails out, and he's going to answer a lot of those questions that are asked before they even get to me. It's going to be really easy, right? Why wouldn't I want to give a better deal? So I've seen things like getting an extra 1% of pref. Is that kind of on par for your deals, or what are you getting for your investors?
Yeah, so generally the main benefit that my investors will get is the waterfall is more significant on the backside than it would be in going with them directly. So, most examples we see 7 pref with a 70-30 waterfall that drops down to a 50-50 waterfall. And my fund might earn a slightly higher pref, but the waterfall being at 80-20 with no adjustment after it hits 2x is really where the big value comes to the LP. So
no adjustments. So you're saying you get your investors like 70-30 the whole way through. Like if you had some whale IRR of 35%, they'd still be getting 70-30 the whole way through.
Exactly. So that is the main benefit. So if they invest with me, quite often they're going to get about the same returns up until we 2x the investment, but above 2x is where it gets very, very lucrative for the investor that partners with me.
Okay, interesting. So sounds like these waterfalls are driven then off of the I want to call it the MOIC, because it sounds more like traditional private equity where you're going off the multiple on invested capital. Usually we call that I'm sorry, it's escaping me now for the moment. But yeah, exactly. And so yeah, that's interesting because usually I see that driven off of IRR. So cool and interesting. it just goes to show there's more than one way to construct a waterfall. Well, I like that. I mean, an extra 1% of pref, that's cool. And I've seen that before. But I mean, really to get an extra share of the upside when things go well, that's really exciting. So yeah, I hope that all of our listeners out there caught all those terms like pref, preferred return, and equity multiple, etc. But I think it sounds like the real lesson here is like, wow, invest with Randy, because that's some really cool stuff that you're able to get for your investors.
Yeah, and I think ultimately for the passive investor that's just newly introduced to this arena, there's so much to learn in this space. It can be a little overwhelming. And more often than not, it's actually investing with that person that you know, like, and trust. And ultimately, it's allowed me to partner with my network over the last 25 years to bring these type of investments to them, because they might not have access to it or might not be able to find those deals, and certainly have not spent the years investigating and researching and networking in this space to really be able to uncover those fantastic opportunities that exist in the market space. So leveraging my network and coupling that with my education over the last handful of years is really the value that impact will bring.
Yeah, exactly. So any other additional benefits? So I would say that, getting a better deal. I mean, obviously that's the number one. That's the prime thing we're all after. But also you have a very, I should say, developed relationship with a syndicator. So if somebody comes to you asking questions, you're probably not the guy who's going to say, yeah, let me put the phone down and ask, right? These are questions you could answer. You have a very intimate relationship.
Yeah. And I think just as important is that the goal with impact equity is ultimately to partner with 3 or 4 different operators across different asset classes, across different geographies, and of course, different operators as well. And the goal and the target of impact equity will be to only partner with the best of the best operators,
right,
in all the different segments as well. So like you said, one other thing I think that's probably important to note as well is I've not partnered and will not partner with somebody that I've not personally invested with historically. So I'm bringing tried and true investment partnerships to my network that I personally have seen monthly communications from. I've seen distributions from. I've seen how these people perform over an extended amount of time. So
yeah, that'd be a great way to segue into our second topic of the day, talking about you as a limited partner. So I'm really impressed. I believe you mentioned 17 or 18 limited partner investments. I think that's huge, that sort of experience. Obviously, or maybe before we get into the LP experience, one thing that you haven't seemed to try is being a co-GP. If you like raising capital and you've been a passive investor and you know all these operators, never tried the co-GP route, huh?
Yeah, it's definitely something that's been in my mind to consider doing in the future. But I hear a lot around the coaching and the mentorship communities and the networking communities where, just find out what your superpower is and focus on your superpower. Leave the other activities that could be superpowers of other people to other people. So being a professional with 25 years of sales and sales leadership experience, I've been building relationships and having investor type or business discussions for years and years and years. Whereas I've not been a guy who's been swinging a hammer. I certainly have not been a property manager. I've not been an acquisitions guy that's gone out there to find things. So I find if I can stay in my lane and try to perfect what it is that I do, then I can really benefit my investors by partnering with folks that do the same thing in their channels.
Yeah, great. And a message I'd like to bring to our audience is, hey, maybe you've never raised capital before, but look at your history, right? So for example, for you, you mentioned, well, you've been in sales your whole life. You've been building those relationships. So I would ask everybody, if you're out there and you're thinking, I don't know if I can do this, or I don't know how to do this, or take the next step, just look at that personal history and who knows what you'll find there as a bridge to the future.
I think that's a really good point too. It's, I've made a point of investing with folks that have a track record and have proven results historically. But I think it's important to note that like people arrive in this investment space or syndication space or real estate with broad histories, lengthy histories of doing very, very different things. And those skill sets quite often are transferable into this space. So, when I'm looking at an operator that maybe they're newer to the real estate investing space, if I can see that they've been a performer in the past in other industries, that's going to translate. And I believe once an eagle, always an eagle, and eagles soar with eagles. So, if they've been performing at a top level, odds are they're going to continue to perform at a top level with my investment dollars as well.
Yeah, great one. A lot of first-time operators out there I know, because certainly we're in a housing crunch right now, major crisis. We'll see how that goes. I just got the word today as we record this, Case-Shiller was down 2.3%, largest month-over-month decline in history. We don't know what that means yet, but I've been watching that very, very closely. I've been telling people, watch Case-Shiller. I don't care about the average price of new houses sold in the US, which is that one's a lot more jittery. But wow, this, and Canada too, by the way. I know I didn't prep you and say we're going to talk about macroeconomics. So this is total live TV here, live without a net. But yeah, I mean, it's interesting times. I mean, we just saw Canada take a little tumble. Now US is taking a tumble. Wow.
Wow, no doubt. And you certainly can't ignore what's going on in the stock market and what's happening to our investment dollars that are sitting over in the S&P. So yes, it is certainly uneasy times, but I think all the more reason to have investors looking at the real estate space as well.
Absolutely, absolutely. So yeah, I've been taking money out of the stock market for a long time, putting it into real estate, and also have been keeping a little more cash on the sidelines than I normally do. So yeah, good stuff. Good advice too. I think definitely if you're one of those people out there that you are primarily an equities investor or solely an equities investor, definitely a good time to think about trying some real estate. Now, you mentioned doing BRRRR, and I know you did at least one other thing. You had done some turnkey rentals as well.
Yeah.
So then you became a limited partner. So tell us about the difference. I mean, my own personal, I'll just tell you where I'm headed with this. My own personal experience is that you have to be a very good operator on the single family level to beat the sort of returns that you can get generally as a passive investor. Your mileage may vary, caveat emptor, but again, after realizing what I could do as an LP, I was not very interested in saying, well, I can dump this $50,000 into this money pit and try to manage it.
Yeah, no doubt. So and I think a lot of people get into single family too because it seems less intimidating. People have their own personal experience with single families, so it seems like the logical next progression to kind of go down that path. But I will share in my handful of years investing in single families, it was anything but passive. It was a part-time job for me, which pulled me away from my W-2 job. And when, as you mentioned, when I looked at the returns that I received over that specific time period, I would say they were probably comparable, but they were certainly more heavily weighted on the back end than they were throughout the journey. And I think a lot of people get into singles because they think it's safer, when in fact, I would argue that it's much more dangerous to go into a single family investment because of the huge repairs that can occur throughout that hold period. If you invest 25 grand in a passive investment, sure, you might only be making $50 or $100 a month on that on a monthly distribution, but you're not getting the $8,000 roof replacement. You're not getting the $4,000 HVAC replacement. You're not getting the empty house that's sitting there for 2 or 3 months without a tenant in it. So I would argue that it's actually safer to go into the passive space where you're not having to spend all the time with that as well.
Amen. And like you said, eagles fly with eagles, all these high performers, top income earners who then want to go and do that sort of thing. No doubt they could go out and be very good at it, but huge opportunity cost on the W-2 front.
Absolutely. Yeah. And I look back and I partnered with great property managers throughout my single family days. And if I were to look at the numbers and the profitability and the income that was made on the profit, it's probable that my property managers made more money on my investments than I did throughout my hold period, because it is a business, albeit generally low margins, but they have the personnel, they have their overhead to cover, and quite often they make quite a bit of their money through the repairs and through the construction process as well. So if you're partnering with property managers, it's great because you don't have to deal with the day-to-day of it as much, but you are giving away a large portion of your profit as well.
Yeah. Well, good stuff. And great points about how you don't have to start out with single family. You don't have to stay there, right? I mean, you can skip a step, so to speak. So just like you, I mean, you were an active investor, then you became a limited partner in some larger investments in commercial real estate. And then from there, you launch your fund of funds. So you didn't have to go become a co-GP or a sponsor of your own deals. You understood the business and you were ready to sort of take that leap.
Absolutely. Yeah. And I think that's a good point. You can stop any way along that pattern as well. I know a bunch of different passive investors that just simply play in the passive investing space. They've covered their monthly expenses. Their nest eggs are doubling in, 3, 4, 5 years, and they're getting monthly distributions as well. So you can be a passive investor and solely focus on that space, especially if you have a high earning W-2 job where you can feed the LP investments. So for me personally, I was in that role where I was a high W-2 income earner, and I was just funneling dollars into these LP investments and really learning the business while I was doing that. And over time, as you mentioned, I'm in now 18 different deals. The majority of my monthly expenses are covered by my passive investments. And now I've got the flexibility and the ability to have options when I got laid off a handful of months ago. And now I don't have to go out and chase down that W-2 again. I can actually chase after my passion and really dig into what exactly I want to do with my life at this point. So
yeah, you found freedom, brother.
I found freedom. So I found freedom.
Good news. And yeah, I would, particularly as we head into economic turmoil, I think what we've seen so far is just a pretty rough chop. I think things are going to get worse. If you're out there, I mean, if you haven't started building that side hustle, you've been thinking about it, do it now. Because if you do get laid off, much better to be in the position of saying like, hey, I'm okay. I can just continue doing that, to know that you don't have to chase another W-2 job if you get laid off. That is a wonderful feeling.
It really is. Yeah, it really is.
All right, awesome. Well, before we leave your experience as a limited partner, I guess I have at least one more question. How about, what do you look for in operators? I think you've covered some of these, but what is the number one most important thing for you?
Yeah, so the number one thing for me, hands down, is track record. What has this operator proven they've been able to produce for their investors? And how many times have they done it? Is this something where they're trying new strategies on every deal, or is this something that they've refined and really built a business behind? So I'm specifically looking for operators that have a track record of years and multiple properties under their belt. So I feel confident that they'll just continue to replicate what they've been doing in the past. Now, moving into the economic times that we are, I'm sure that we're going to see results that vary, but if they've got the business model and the process and the structures and the resources in place, then they're likely the ones that are going to be able to weather the storm. And what I'll, you didn't ask this, but what I've shared or what I found in my years of business to business sales, and I was in that arena during the 2008 downturn, and I got to meet with business owners before, and then I got to meet with business owners afterward. The businesses that had systems and process and were running lean machines before they went into those recessionary times, they're the ones that made it on the backside. And if they were strong enough to make it through, quite often they were able to pick up a large amount of business from these other smaller operators that were not prepared. So I suspect we're going to see something similar in this downturn, where a small group of top performing operators will make it through this downturn, and they'll be there waiting for all of these other deals and opportunities to come onto the market when some of the others start to fail.
Yeah, definitely expecting some shakeout, sort of alluding to that earlier that we're still at a stage we need a lot more housing. So we do have a lot of new operators out there, but yes, at some point, a lot of things. I guess I'll leave it to you, but I'll throw one out first. Bridge loans. That's where I see a lot of people failing down the road, and
Yeah.
I've heard sort of the murmurs or the distant early warning signs of that there's going to be an issue with that. I mean, we don't know when the Fed's going to pivot. I mean, if they pivot, at the next meeting, then maybe there won't be a whole lot of that. But I don't think that that's in the offing. So, yeah, what sort of places might you predict we're going to see a shakeout?
Yeah, I think it's just that. I think it's the folks that did not get the correct lending products in place on their purchases up to this point. What is that going to look like? I don't know exactly. But what I'll share is I've seen some operators that carry heavy reserves. And I've heard a lot of folks talk against that strategy because it's expensive money to hold these reserves on the side. But I would much rather have my money with an operator that has heavy reserves versus the person that was trying to save a buck and not hold those reserves. I just got notification this week on one of my operators that is pulling back on distributions. And I think we're going to see a lot more of that. And for LP investors that are depending on those monthly distributions for their livelihood, I think that's going to be an eye-awakening or eye-opening time for those folks to see that maybe their strategies had some flaws in them. So definitely something to watch out for.
Yeah, I think that's a very mature perspective, without a doubt. I think that your working capital, operating reserves, rainy day fund, that's the first thing that takes a hit when you're trying to figure out how can we just make this deal work.
Right. Right. Let alone capital calls and
Oh
such
yeah,
that I'm sure
oh
to come.
gosh, yeah. Let's banish the phrase. Oh my goodness, capital calls. We don't want any of that. Without a doubt, yeah. Better to hold on to the capital than to have to go back to the investors and say, hey, we're in trouble. Well, one other thing. What about communication? Anything you'd like to say on that?
Yeah, I think, and we discussed this earlier a little bit.
Yeah.
I would actually I would prefer to sacrifice some of the returns to have improved communication, just for my own peace of mind. And it's hard to how do you quantify peace of mind and how can you put a dollar value on that? But another thing that I look for in my operators are those folks that consistently share updates about what's going on with the properties, good news and bad. Like I want just as much as the good news, I want to hear the bad news as well. So I'm not sideswiped by it down the road. So I look for operators that have consistent monthly communication for each of their properties. I like to see folks that are actually all over social media and promoting the business regularly. I like to see folks that are on podcasts, at conventions, on the stage. Those are the types of folks that I want to be behind, because I'm working for a couple of Fortune 200 companies. I'm a believer in brands, and I believe that people and businesses that invest in their brands are telling, because generally those businesses are the ones that make it through the difficult times. So, I'll continue to invest in those folks that are investing in the resources that are required to have regular communication, consistent communication, and open and honest communication with their investors as well.
Yeah, I love it. Bad news does not age well. So you're right
Yeah.
about wanting to hear the bad news too. I mean, I'm an operator myself. I never hold it against the operators when they tell me bad news. I get it. Things you didn't plan for, things you couldn't have planned for, macroeconomics not going the way you expected. I mean, if you've never opened up the walls and seen something you didn't expect, you've never opened up a wall before.
Yeah, no doubt, no doubt. So I actually, this is a little bit off the conversation here, but during my Burr days, my wife and I flew out to Atlanta to go see a property we were looking at, and it was supposed to be a light, lipstick rehab. And we showed up the day before. We walked in, and it was literally tore down to the studs. And we were expecting, $15,000 or $20,000 rehab. And we showed up the next day, and the contractor presented it as if this is just fantastic news. We're going to take this down to the studs and give you a whole new property for the same price. But we all know that there was a communication error between him and his guy that was renovating the unit, and made for some interesting conversations, I will say for sure.
Well, that's awesome. See, that reminds me, there's one great question I love for people who have managed your properties. Did you manage your properties back then?
I did not. No, I
Oh, you did
managed
not.
the
Okay.
construction process, but I did.
Okay. So so no great property management stories. Those are the best. You manage your own properties, you're going to meet the most interesting people. I'll just put it kindly.
Yeah. I did have a situation where we had that same unit that we had taken down to the studs. Beautiful, absolutely beautiful single family home by the time we were done with it. But literally the weekend before the move in, somebody stole their HVAC unit. And you just don't think about HVAC units just getting up and disappearing. But in this case, it did, which made for a fun explanation to the folks that were moving in that weekend. So, yeah.
Yeah, I'm telling you, it's a jungle out there. It's a zoo.
Yeah, no doubt.
All right, so let's move on to the third phase. You are a podcaster yourself. So tell us about the gentle art of crushing it. What is your podcast focused on?
Yeah, so the Gentle Art of Crushing It is actually a podcast that was launched, I think, about a year ago with a partner of mine that I've met through the 𝐒𝐭𝐡 mindset coaching community. He had launched a podcast. He was, I would say, sporadic at best in launching different episodes throughout the year. And then he decided to partner with me and 4 others to make this a 5-day per week podcast that has different focuses depending on the day that you're listening. So my edition is the passive investing edition. And the sole purpose of that podcast, as with Impact Equity, is just to educate and inspire the new passive investor as they start their journey moving from traditional investments over to passive investing in real estate through the syndication model most often. So we're bringing guests on that know about the tax benefits. We're really digging into the weeds of, what does a GP mean? What does an LP mean? Like literally nuts and bolts of what does a syndication model look like, and helps to give them the confidence to pull their trigger on their first passive investment and subsequent investments in the space.
Yeah, great. And a lot of need for that, especially with the stock market not very gently being crushed. That's getting crushed in a very sad way. Yeah. So hopefully some people who have some money on the sidelines or who are willing to try something new and hopefully get some preferred returns along the way, rather than just watching that capital being depleted every day. It can be so precious.
Yeah. I had a situation, not a situation, but I had a post I put out on social media a couple of months ago where literally I was having my first deal go full cycle in 14 months, where I got a 1.8 equity multiple on it, while I was looking at my stock market losses of about 20% year to date. So it really just shows like the different opportunities that exist in the different spaces. So
yeah, 100%. And most people don't know about it. I mean, that's the most amazing thing. I mean, you hear people, it seems like everybody who's in syndication, whether it's limited or general partner, they describe this aha moment where they realized, wait a second, it's not just stocks and bonds. Look at this. I can do this. I can do it passively. I can do it actively. What a revelation. So hopefully you're able to touch a lot of people, and I'm sure you have already. Very, very important work you're doing out there. Thank you. I've been thinking we need to rename the lightning round, because I think the questions I've asked here are just not really lending themselves to very quick answers. So maybe we'll call it the hot seat this week. So how do you feel, Randy? You ready to come sit in the hot seat?
I am ready to jump in the hot seat. Definitely.
All right, let's jump into it here. All right, so tell us something about one of your real estate markets that most people wouldn't know.
One of the things about my real estate markets that most people wouldn't know. Interesting. So I focus primarily in multifamily here in the Phoenix metro, Phoenix, Arizona. We saw rent increases last year in the high 20%, as well as the year prior, which if you do the math on that, that's just absolutely amazing. Certainly it cannot continue at those rates. But when you start hearing folks that talk about rents starting to decrease, even if we were to come down to 4 to 5% rent increases year over year, the returns on these performers, they're just absolutely amazing. So I think there's I saw a stat that shared there are, gosh, I would just be guessing, but it's in the hundreds of thousands of units in Phoenix, Arizona in this Class C space, which is just an amazing number of facilities that are probably still all classic with, the regular interiors that they had from 20 or 30 years ago. So
you're talking Phoenix here. There's a lot that's left to be renovated. So if you're still going after that Class C, the game's not over yet.
the game is not over. No, definitely.
Okay. Love it. What is some advice you would give your younger self?
Yeah. So the easy answer is start sooner. I think everybody always says that, but I think probably more important is I used to sit on the sidelines and be extremely stressed out about the decisions that I was making and wanting to make sure I was making the right decisions. And I think more important than what you decide is just simply deciding and going all in on whatever you decide. So instead of beating yourself on, option A, B, or C, pick something, go all in. And what I found is you can be successful at just about anything if you put your heart and soul into it and go deep. So less worry about the specifics and more about just taking that initial action.
I love it. Decisiveness,
Yeah.
Key quality of highly successful people. Well, in terms of advice, what is the best advice that you've heard in real estate, or the best real estate advice you've got for us today?
Yeah. I think the most important piece of business, whether it be real estate or anything, is mindset. And, the saying that if I had X amount of hours to chop down a tree, I'd spend 90% of the time sharpening the saw. Our mindset is actually the saw that we need to sharpen. And if we can start the day on good footing and good ground, I think that carries throughout the day. So making sure you have a great morning routine where you get realigned with your goals and you get realigned with the broader vision, and then jump in and take immediate action.
Excellent. And then I like to say that real estate is also a place where there's a lot of bad advice floating around. So what's the worst advice that you've ever heard in real estate, or tell us a pitfall that you'd like to help our listeners avoid?
Yeah, so probably one of the biggest mistakes I made in the space was trusting people. Well, let's call it this: getting advice from people and then not actually executing on it. So specifically, I had two different situations where I should have had my own experts come in and review a property. And I trusted the operator in both situations versus bringing in my own experts to do that. So, I had somebody share with me once, if you go to a barbershop, you're going to get your hair cut. If you go to an operator that's selling something, they are going to try to convince you that what they're selling is best. Always get third-party expertise to confirm or deny if that's true or not.
Yeah, awesome. And obviously with a fund of funds, when you've got that much money going to each deal, that's something you can do. Not easy for people who are just, putting in 25, 50, 75.
Absolutely. Yeah, absolutely.
All right, let's take a nod to the randomness of the universe. I got my random question cards here. So just tell me when to stop cutting the deck. And this is going to be something just wild from left field, I promise.
Great. Let's stop there.
All right. Oh,
I'm nervous.
You know what? This is one I've asked before, so I'm gonna have to ask another one, but I'll tell you what it is, just so people don't think I'm gaming the system. What do you wish you were better at saying no to? Let's just take the second one, because okay, yeah, this one I don't think I've ever asked before. Where would you choose to live if you had to leave this country?
Great question. So my wife and I are about to go on another European vacation, and I absolutely fell in love with Florence, Italy. So I think Italy is probably where I would like to move if I had to leave the country.
I love it. Well, my wife is Sicilian, so she'll just love that answer. So perfect.
Very
we didn't
good.
even plan that out ahead of time. That's
That's great.
All right. Name a book that has helped to forge you as a leader and as an entrepreneur.
Yeah, so I'm a big fan of Benjamin Hardy and Dan Sullivan's books. They actually, for those of you that don't know, I think they have a book contract to do a book per year for the next 10 years. So Who Not How is absolutely amazing. Gap in the Gain, I think more so from a mindset standpoint, is fantastic. It instructs you to focus on how far you've come versus how far you are falling short, which I think that mind shift alone can just have a dramatic impact on your life and those around you as well.
Awesome. All right. Now, this is probably the hardest question in the interview. How has a failure or misstep set you up for later success?
Yeah. So yeah, as they say, failures lead to the most growth. Let's see here. I had a situation where I moved from one Fortune 200 company over to another Fortune 200 company. And I ended up moving into a role that I didn't necessarily want because I wanted to get into that organization. And what I found was that if I don't believe in what I'm in the organization or in what I'm actually doing, then that will come through and show through in my activity, that'll show through in my passion and my excitement. And ultimately it'll lead to results that are not where they need to be or where I would want my brand to produce. So be careful the decisions that you make based on, the long-term goals there. Don't just take a position or start a company that's something that you're not truly passionate about, because ultimately you're not going to be successful and happy in that role.
All right. And then just one last, can you give our listeners a quote to help forge them as leaders and entrepreneurs?
Yeah. So one of my favorites is, whether you believe you can or you believe you can't, you're right, by Henry Ford. Kind of going back to that mindset piece, that if you wake up thinking I am not going to be able to do this, you are probably not going to be able to do that. But if you wake up having confidence in yourself that you can get the job done, then you most likely will find a way.
Love it. Perennial favorite of mine as well. And I just want to thank you for the interview, Randy. You've given a lot of knowledge and insight from your personal experience to our listeners. I know that there's going to be a lot of nuggets of wisdom here. I just want to make sure that our listeners are able to reach out to you. What is the best way to reach out to Randy Smith?
Easiest place to find me is on LinkedIn. I'm on there constantly. It's under Randall Smith or Randy Smith, either or. And the business is impactequity.net. And of course, Gentle Art of Crushing It podcast.
Awesome. Thank you so much for coming on the show today.
Awesome. Thank you as well, George.